Inflation is high and still widespread, enough to send shivers down the spine of investors everywhere, as statements like this have done for a couple of years now. Inflation and interest rates have created a massive wall of worry for investors since the end of 2021, and the stock market reacted accordingly, with the S&P 500 losing 25.4% from its peak in December 2021 to mid-October 2022. But that was said by the Fed on October 17, 2022, not now. And how has the S&P 500 reacted since then? Up 28.3%, climbing the wall of worry as it so often does. Easy to see now, but how well do investors react in real time? How well do their portfolios perform after major retracements in the stock market? Almost everybody struggles when deciding when to get back into the market if they've sold stocks on the way down. In a moment, I'm going to show you how this real money open book portfolio handled this period. And after showing you a performance update over 4 different periods, I'll show you some of the highlights and lowlights that have contributed to the growth over recent months, so you can start getting a feel for and understanding the ebb and flow of this rules-based portfolio. Before I do that, it would be remiss of me not to chronicle some history about this real money publicly traded portfolio. You can read the playlist description to get more background, but I'll mention some information now that is not included there. There have been 2 major mistakes made in the investment plan over the life of this portfolio. Firstly, in answering an ongoing question from customers about adding new capital to their rules-based portfolios, and whether to start a second portfolio and add the money to the same portfolio, a decision was made to start a second portfolio using exactly the same system and the portfolios to be run side by side. A rule was added that the 2 portfolios had to hold mutually exclusive open positions. This meant that the second portfolio took trades that this first portfolio, should have taken, which, with the benefit of hindsight, stifled the growth of this first portfolio. With the benefit of this real money experience and additional portfolio simulation research, capital should be added to the same portfolio rather than starting a second. The second mistake was that this portfolio was started in 2016 with 13 open positions. Additional research and experience proved this to be too many open positions for the starting amount of capital. Research showed that there should have been 10 open positions in this portfolio. The live traded transforming from 13 positions down to 10 positions has meant that between 80% and 89% of capital has been invested during a strong market period, when 100% should have been invested had the portfolio already had just the 10 positions. This has led to 3 open positions that have been open for over 8 months, with position sizes that are far too small compared to what they should be. These are open profit positions of 14%, 37%, and 63%, which have amounted to around $7,000 of lost opportunity profit to date. One of the major objectives of investing with the mechanical system is to have 100% of all the capital allocated to the portfolio invested in the market, while the system continues to signal new entries. With the benefit of hindsight and reflecting on this objective, the investment plan should have been modified to permit pyramiding into currently open positions up to the new next position size, which is automatically calculated by the rules-based systems portfolio manager. Sure, 2 mistakes, but the wonderful thing about telling the story of a real money portfolio that has been transparently watched by our customers from its inception is that there's nowhere to hide. We all learn together, and now you too can learn through this YouTube channel. In these monthly performance updates, I'll benchmark portfolio performance against the S&P 500 Total Return Index, which ever so slightly outperforms an S&P 500 index fund or ETF like the SPY due to fees, and which very few mutual funds beat over the long term. Look up the SPIVA scorecard and SPIVA persistence reports for evidence to that statement. Let's get on to the performance update. To continue the story I started in my opening, I'm going to start this month's performance update looking at how the portfolio handled the period in the market from mid-October 2022, around when the Fed published that inflation article. Remember, this portfolio does not make any discretionary decisions as to what and when to buy and how much to buy. To execute this portfolio, I 100% follow the buy and sell signals as they are generated by my rules-based system. All my discretion was used when developing the system and documenting the investment plan to execute this portfolio. Now my decisions are all lock and step with the plan and the system, for better or for worse, which is what makes this process so replicable and repeatable by anybody. Looking at this chart, the blue line is the equity curve of the portfolio, which is the daily plotted value of the portfolio. The red line is the S&P 500 Total Return Index. On September 26, 2022, the real money portfolio held just 2 positions and was 84% in cash. You can see the number of open positions on the bottom chart. By the time the Fed printed the inflation is still high and widespread article, just 15 trading days later, the portfolio had added another 4 new open positions. The system is not predictive, nor does it have any idea what is going to happen next in the market. It merely follows the price movement and makes unemotional and objective decisions based on the potential of a new trend starting. The truth is that nearly all subjective or discretionary traders struggle with when to re-enter the market after a large retracement. What unfolded over the next 9 months was the outperformance shown on the right half of the chart. A 36% rise in the portfolio value compared to the S&P 500 Total Return Index, rising 27%. Let's now look at the performance comparison over a number of periods. In this table, there are 2 lines of performance. The top line is the rules-based US portfolio that we're talking about, and the bottom line is the S&P 500 Total Return Index. The first column shows the return over the most recent month, July, where this rules-based portfolio rose 6.04% compared to the S&P 500 Total Return Index of 3.21%. Moving to the next column, this just shows the performance I've just spoken about from September 26, 2022, 36% compared to 27%. Moving along to the next column, the 1-year performance shows an outperformance of nearly 4% over the year. Moving to the 2 longer periods, now we are showing annualized return as opposed to just absolute return because it's longer than 1 year, is you can see that there's only a slight performance in annualized return over 4 years, and over the 7-year period since inception, that's 7.6 years, there's a 1.5% annualized underperformance. Now, this portfolio has not performed as well as our research showed it should. This is due to the 2 investment plan mistakes I discussed earlier. I look forward to showing you the potential this rules-based portfolio has to catch up and overtake the S&P 500 Total Return Index over the long term. I said I'd show you some recent highlights and lowlights that are all part and parcel of the life of this ongoing rules-based portfolio. I'll start with the lowlights of some trades that were bought after the trough in September 2022, sorted by the date they were opened as trades. There were 2 biggies, much bigger than the average loss trade size. Notice how the other loss trades were kept to being small. These are very simple to list in the portfolio tracker software that we use. And to finish, here are some trades that were highlights, also bought after the trough in September 2022 and also sorted by the date they were opened as trades. There were 2 juicy trades of 73% and 41% in Axon Enterprise and Netflix respectively. I trust you've learned some new stuff about trading the stock market and more specifically about trading with a system. I wish you consistent and objective investing. If you want to be the first to be notified about the ongoing story of this real money portfolio and learn all the ins and outs of trading the stock market with a system, then subscribe to the channel and tap the bell to get notifications of future video publishings. Until next time, bye for now.